Good afternoon and welcome to the Boring Millionaire podcast. My name is James Lamantia and my mission is to not only make you money with the stock market, but to educate you on the stock market so that way you could feel confident making money with it all on your own. So today is Sunday, June 15th, and I'm going to discuss this episode's theme, which is navigating uncertainty and finding opportunity, but I'm also going to go over what we saw in the stock market this past week and where I think we're heading this coming week. So the week was slow, the week was boring, but hence the name. So Monday, Tuesday, Wednesday, and Thursday, we did see the market inch more positively, each day with a very minimal gain, but a positive gain nonetheless. Then on Friday, when the Iranian-Israeli conflict kicked off, we did see the market negatively react to that. However, I do believe all that negativity is already priced in. The market has been on a tear. It's in an upward trend. There's plenty of positive signals surrounding the market. So I do think that this is a discount within a bigger picture rally. And with it being a discount, I would like to say this is where we find opportunity. So when the prices are lower in a positive environment, that's when I like to be buying stocks. I would say if you're not sure what particular stocks to be buying when the market is low, just buy the UPRO or the TQQQ ETF. It's a great way to be invested in the market very broadly, kind of a blanket ship over all stocks. And then that way you're getting your piece of the action while the price is discounted. So it really is as simple as that, sometimes investing in the market. But later in the episode, I'm going to get into my $50 list, and I'm going to go over the more particular stocks that I'm buying this week. But I will say when you're seeing a positive market environment where the indexes are slowly grinding up basically every day, when there's a discount, say a percent, maybe even 2%, a discount nonetheless, that's where opportunity lies. Because just like any other store you would shop at, if it's something you're already intending on investing or buying and it's just seen at a lower price, you're getting what you want for a discount. So market discounts are great opportunities to be investing your money. And with that, I would also like to say there was some economic data that came out this past week. Inflation data came out on Wednesday. We did rise 0.1% from the month prior, but that's as little as we could rise. So I'm not really taking it as anything negative. It's also a lower than expected increase. So though it is increased, it's better than expected, which ultimately is a positive for the market. So I'm excited by what I see. I would also like to add where the S&P landed on Friday's decline was the week prior's high for that week. So as I've mentioned before on previous episodes, old highs become new lows, and that's exactly what we saw in Friday's decline in the stock market. So overall, even though we saw over a percent decline on Friday's trading, the week was only down 0.38 for the whole week as far as the S&P is concerned. So what that tells me is that, yeah, we had a pretty rough day on Friday, but we basically just gave back the positivity that we saw in the week earlier. So nothing really scaring me away. I really find it as an opportunity to be investing in stocks. And that's how I make money in the stock market, is buying discounts and buying other kind of strategic buys that you could find in the market. So moving into that, now that we are nearing all-time highs, we're in a positive market environment, I wouldn't suggest throwing your money at everything that's near an all-time high. It's not a bad thing if you're buying proper companies and things you want to be invested in for the long term, but what I would look for is discounts and more strategic opportunities. Now, what do I mean by a strategic opportunity? So seeing the market down over a percent, there's a broad discount. There's more of an opportunity based on, a price decrease. But I always like to buy stocks when they're at their 3-month, 6-month, or 1-year average. And the reason I do that is because with all the years I've been experienced doing this, you always see indexes and stocks trade at those metrics. Now, it's not a guarantee, but it is more likely than not that you'll see stocks, if they're falling, let's just run a hypothetical. You have a stock at $100, it falls to $92. Okay, 8% discount, pretty fair. And then it lands at its 1-year average. To me, that's something that's totally buyable, totally investable. And so long as it's a paramount company that molds the infrastructure of the society that we live in, it's something that I would want to be buying. Now, what do I mean when I say proprietary? Proprietary means unique, for lack of better words. So let's pick Amazon. Amazon is something that everybody uses nearly every day, and it basically molds the way we live in society today. So I'm not somebody who looks at crazy financials or the in and outs of every single company I have money invested in. Sometimes it really, truly is as simple as, what does this company offer to the world as we know it? So again, to use the same example with Amazon, it changed e-commerce. It changed commerce overall. And 25, 30 years ago, you had to go to the store and you had to buy your things. Now we live in a world where you order things online and they're brought to your house. So it changed the world. It's a staple in the world. And that's why I invest in that. So another thing I look for when investing in stocks is sometimes a little bad PR. In weeks prior, I mentioned United Healthcare, so I'm going to use that as an example. United Healthcare gave poor earnings, had no outlook, which was just strange, and it sent the stock down. Following that, their CEO at the time resigned, and then following that, the Department of Justice launched a probe into United Healthcare, indicating that they suspected there was fraud going on. So, yeah, not good news. That surrounds the company and it sends the share price plummeting, but it doesn't change United Healthcare. It doesn't change the business that they do. It doesn't change the industry that they're in. And it doesn't change the proprietary value that they give to that industry. So I will say, yeah, that's not good, but it's not everybody at United Healthcare committing fraud, if they even find it. It's several key officers who got ahead of themselves, did things they weren't supposed to, and the share price suffered for that. But the company as a whole did not change at all. So it's moments like that and environments like that when bad news is surrounding a stock, so long as the company itself is not changing, I invest in those moments. As Warren Buffett, one of the greatest investors alive, says, buy when there's blood in the street. He also says, buy when others are fearful and sell when others are greedy. So you don't always want to follow the trend. Sometimes you want to look in a unique way. And that's exactly what I'm trying to convey with this episode. It's sometimes a little more, there's sometimes more precision looking you'll have to do when finding the stocks you want to invest in. But if you're looking at a caravan of 100, 150 different stocks that you're comfortable investing in, comfortable having your money in for the long term, when you find them in these positions, that's when it's ideal and opportune to be buying them. So that's usually how I feed myself as far as the stock market. When stocks are down, they're underperforming, they're lackluster, they're at their average metrics. Those are buying signals for me, and that's what I like to do when I'm buying a stock. And the reason I'm getting into this in this week's episode is because as we near all-time highs and inevitably push into further all-time highs, most stocks are going to be leading the parade and will be trading at their 52-week or all-time highs. So with that said, I like to find the underperformers. One I have in mind right now is Apple. There was a time where while the market was recovering, the Mega 7 was underperforming. Most of them are catching up and getting on pace now, whereas Apple is not. So if the market breaks all-time highs and stocks like Amazon, Alphabet, Microsoft, Nvidia, they're leading the trend and they're breaking all-time highs, while Apple is lackluster and still 15% off its all-time highs, Apple is the stock that I would want to be buying in that situation. You take a closer look, maybe it's sitting on one of those metrics, just further reiterates that buy signal. But in that example, Apple is the underperformer. They make iPhones, they make everything that they make, and have a huge portfolio that molds the world that we live in. So they have proprietary value, the stock is discounted, and that's a good enough reason to be investing in stocks. And that's what I look for when we push all-time highs and we're in a positive market environment. So what am I looking at this week? I have a $50 list, and the reason I do a $50 list is so that way it's budgetary. Anybody could do it, but you take that list, you split it in half, you do $25 a week, more economic for people. You could even go 100, 200, whatever your budget is. It's a system where any budget could work, and that budget could get you into the stock market, building a stronger portfolio for a better financial future for yourself. So in this example, let's take $50. You take that $50, you break it up into 5 $10 increments, and then you take that first $10 increment, and this week I would be buying Visa. So Visa, a staple in the world, everybody uses credit and debit cards. They fell to their 3-month average, one of those metrics I like to look at. And just like the examples I gave prior, it's a piece of the world that's never going to go anywhere. Falling at a price discount, fell about 4.5% on Friday, and it landed at a metric that shows me it should hold here. So good enough reason to be buying Visa, all off trading analytics and price discounting. My next $10 would go into Simon Property Group. Simon Property Group is a real estate holdings firm, and they have an excellent dividend. They pay 5.35% a year. So what a dividend is, it's a quarterly income. Every 3 months, the company pays you just to own the shares. So you buy the shares, you put them in your portfolio. Every 3 months, they're going to pay you just for ownership of those shares. So I love dividend paying stocks because it allows people to create a silent background income while their investment still travels in the vehicle that they're buying. So Simon Property Group, excellent company, discounted price. They're on their 3-month average and they pay an outrageous dividend. So wonderful buy, something I'm very involved in and grabbing more of this week. My next pick is Uber. So Uber, again, fundamental to the world we live in. They, for a little over a year, were trading in a plain, stagnant range. It was very narrow. It wasn't going up too much. It wasn't going down too much. But it finally broke out of that range. And now, after a nice little tear, it's calming down a little bit. And I think it's going to meet its 3-month average. So I'm not ready to pull the trigger yet on Uber, but I'm watching it, waiting for it to hit that average. And then once it does, I'm putting my money into that company. But let's go back to the earlier part of the episode. You always have to plan for both avenues. So that's my plan with Uber. I think it's going to hit the 3-month average. But what if it doesn't? If it hits it and it falls through, I need to reevaluate and say, what's the next level I should expect Uber to land on? It would maybe be one of the other averages. You'd have to look at the chart. Or it might not meet the 3-month average and it could start to rally ahead of time. So in an instance like that, I would set up a plan and say, my original plan A is to buy it at the 3-month average. Plan B, if it starts to move quicker than that, what's a price I'm comfortable buying higher than where it is right now, but to know that I'm getting involved in Uber. And that's another thing to keep in mind. You are never going to buy a stock at the lowest price, and you're never going to sell a stock at the highest price. But if you buy it at a good price and you sell it at a good price, you made a great trade. So never get too stingy about what price it actually is. The bigger focus and bigger picture is, what are you investing in? Is it safe for you to be investing this much money into it? And if it's something that you feel confident having that set amount of money in for a long-term time, you'll be fine. You will definitely be fine. So Uber, strong pick. I'm looking for the 3-month average, and we'll go from there. My next pick is McDonald's. So again, McDonald's, something we're all familiar with, molds the world that we live in. Little side note, McDonald's is actually a real estate company. So they own all of the property you'll find a McDonald's at. I think that's tremendous value that's added to the company as a whole. And with that, they pay a 2.35% dividend. So again, creating background income just for ownership of those shares. My 5th pick this week is Intuitive Surgical. Now, I mentioned it a few weeks ago on the podcast, and the reason I'm bringing it up again this week is because it did fall quite a bit. I don't have the percentage in front of me, but rough math would say it's about 7-8%. It fell off its high, and it's just hanging out at the level it fell at. But what I'm doing is dollar cost averaging my buy-in. So I mentioned it a few weeks ago, bought it at a higher price. It's since fallen. Now it's lower than where I got it at originally, but if I invest $10 into it this week, my average buying cost is now lower, making it a better investment for my portfolio. Also, to circle back to something I mentioned this episode, it's a company I want to be involved in. So I already want to invest in it. It's at a lower price. Just because I bought it at that higher price, there's nothing wrong with that. I want more of this company. I want more ownership of this company. So to put my $10 in it this week, I'm getting it at a better discount. And like I said, with the any store you go to example, it's something I want. It's just cheaper now. So why would that steer me away? So that's my $50 list this week. I would also like to just say honorable mentions. We have Lockheed Martin, Raytheon, and Northrop Grumman. Those are warfare stocks, for lack of better words, but they are stocks that provide the tools and resources that are used during warfare time, and they benefit from news like we're seeing out of Iran and Israel. So as a human being, you don't want to see things like that happen, but as a realist, those things happen. And investing in companies like that, yeah, you're not encouraging what's going on, but you're benefiting from what's going on by investing in what's going on. if it's bound to happen, you may as well make $1 off of it. And then a second honorable mention I would like to add in this episode is actually the Grayscale Bitcoin ETF. Now, the reason I would be buying that is because crypto evidently rallies when there's war going on. When there's conflicts in the world, there's a light that shined on crypto and Bitcoin that says this is a global technology. It removes people from the regular traditional financial constructs of the world we live in. And just given that information alone, I think crypto is going to rally over the next week. So without having to buy any crypto itself, that is a good way to benefit from the crypto rally. So again, just an honorable mention, another place you could put your money in the coming weeks if you think this conflict is going to continue and escalate. So with all those things said, please follow me on Facebook, Instagram, and Threads. You could find every episode on YouTube, Spotify, and Apple Podcasts. And I'm always available for any direct questions you would ever like to ask me. My mission is to make sure that you feel confident in making money for yourself and confident understanding how to make money for yourself. It's up to us to create a better financial future for ourselves, and I'm here to help convey what I use in my day-to-day life to create that better financial future. So thank you for tuning in, and I'll see you next week.